Welcome to the Asset Coach and Tax Strategist YouTube channel. If you're a subscriber, thanks so much for subscribing. If you're a first-time viewer, thank you for spending your time here with us. If you like our content, please give us a thumbs up. For you new folks, Asset Coach Tax Strategist YouTube channel is based on the book Economic Termites. This is a book that I wrote a few years ago talking about taxes, inflation, time, laws, and regulations. Also, I wrote a second book called Farming Assets. Those two books is really what this whole channel is about, addressing those situations and how they affect you and I in our ability to grow our wealth. So, as an asset coach and tax strategist, my name is Robert Wolf. I am the CEO and founder of Terra Firma Business and Financial Consultants and its affiliates. We have a bunch of companies that we've built out this ecosystem surrounding the basis of what we talk about on this YouTube channel. So, if you're not a subscriber, hit that subscribe button. We drop episodes every Thursday. Again, if you are, thanks so much, and let's get into this next episode. All right, welcome back to another episode of Asset Coach and Tax Strategist. I'm so blessed that you're here. I appreciate you spending and investing your time here, and so I'm just excited for this this opportunity. And what I've started to do as kind of helping to figure out what to communicate to you about the economic termites, right? Taxes, inflation, time, laws, and regulations, how to talk about assets and how to structure those assets. My other book, Farming Assets. I've been sharing some of the things I've been learning over the years with different YouTubers that I've used and different resources that I've used. I would love to say I was born with the information that I was, but just like you, I had to learn what I learned, what I know. And so not everything I learned is valuable, but certainly everything I learned has been useful. And so I want to make sure that as we go through this, so that there's a couple. One of the episodes I've shared was talking about Toby Mathis. An attorney. I really like his content. There's a couple others. Robert Kiyosaki's Rich Dad Poor Dad Advisors, his Rich Dad Advisors always have good content. Tom Wheelwright, Ken McElvey, I think is how you pronounce his last name. He's the real estate guy. I like his content as well. Mark Kohler and Matt Sorensen, they're based in Utah. They're partners. And attorney CPA partnership. They have some really good content, and I really like listening to them and some of the stuff that they provide. And then there's a handful of other guys, but the reason why I brought up the ones that I brought up is because they bring a more of a legal slant into things than some of the other folks that I watch and I utilize as a knowledge base. Give me other things and concepts and theories of stuff that's important, but I also like to bring into the legal process or the legality. And I'm not an attorney. I don't act like I'm an attorney. I'm not a CPA. I don't act like I'm a CPA. In fact, I'm just somebody who's been hungry to learn about how to build wealth effectively and efficiently. And through all these different avenues and people like I just shared, God's blessed me with the ability to create a very simple way of communicating, understanding it. A lot of that's due to how these other people communicate as well. They're just as good. They have tons of followers, way more than I do. That's part of their strategy. And my strategy is not followers. My strategy is just, I like this. This is fun to me. This is an outlet. This is a way for me to give content without me being on the call with each of our clients and members, but also people who are researching our firm, Terra Firma, and who are interested in potential membership with us, what that looks like. So let's go. Let's dive into the next topic here. And this is Toby Mathis did this episode. He called it the 4 rules the rich don't want you to know. And I think that's clickbait, to be honest with you. Some of these titles on YouTube are just to clickbait capture you. The rich don't care if you know these rules. They don't care if you know these rules. In fact, most of them that are successful, if you reach out to them and ask them how they got there, they're pretty open in explaining they want to give back. There's a lot of YouTubers and there's a lot of books, personal development books that were built on these authors interviewing successful people. They want to give back. So it's not like, oh, like was it Gollum with the Lord of the Rings, my precious, right? That's a bad name. I don't like these types of these types of titles because it gives folks who've made certain choices and struggled and succeeded in the business and certain aspects of the world somewhat of a bad name in the sense that they're trying to hold the secrets. No, this is really everything they've done to succeed is all public information. It is. It's all public information. Everything I talk about, I didn't make up. I'm just regurgitating what other people do. Now, I may repackage it to make it sound and simple, or may understand it a little bit differently how I understood it and like to explain it. So, but let's talk about these four rules. One, must start before there's an issue. Now, here's the interesting thing. What does he mean by this? Don't try to do planning once there's an issue that has arisen. It's not going to happen. You need to be prepared. You need to already be proactive instead of reactive. Okay. I went to a retreat years ago, and one of the speakers was part of an elite sheriff's team, kind of like a SWAT. And one of the things he always talked about has how they're always training. And it really made me think about our military as well, the Navy SEALs and such. And they're always just training, always preparing, always going. Why? Because they're staying ready. And this was a point that the gentleman made. Stay ready so you don't have to get ready. Be proactive. Get your you know what in gear so you're not reactive if something happens. Because the more successful you are, and quite honestly, if you're a business owner, you will be sued or you will be in a lawsuit. You will be in a situation at some point in your career. And if you haven't, well, God bless you. That's awesome. Most lawsuits aren't because somebody did something wrong. They're a disagreement and they're costly. So making sure you're already prepared for said type of situation, very, very important. Number two, separate ownership from control, meaning you don't have to necessarily own things, but controlling them is important. And there's a difference. And the legal system is and really structuring entities, trusts, agreements, certain documents the legal system allows you to do such thing to where you can control particular assets, but you don't actually own those assets. And that's really important because the owner so if you get sued and you're not the owner, then you can't sue me. You got to go after the owner of the asset, right? But if you're suing me, it's because I must have wronged you, not necessarily what I have or what assets there were, right? So very, very important. Have ownership held in separate structures, because most entities, business entities, trusts are separate entities. They're separate structures. They're designed to absorb and insulate the liabilities of that particular structure. So whatever assets are inside of that are insulated inside of that. Number three is use correct entity for that purpose. What it means is with the different types of entities, whether it's a trust or certain types of trust, LLC, corporate structures, or LLCs taxed as corporate structures. There's different ways to organize certain things to where you're able to not necessarily create layers, but more insulation from particular situations. But like I was saying, is make sure that that entity structure is correct. For example, you if you have a land trust, make sure there's land in the land trust. Plain and simple. If you have an LLC and that LLC owns land, but you can have a land trust. Again, I'm not an attorney, I'm not giving you advice. This is just education information. Go seek an attorney. If you're not sure what to do, go seek an attorney that can help in this structure. Again, just regurgitating somebody else's advice who is an attorney that says, hey, you know what, you need to really think about this. This is what the wealthy are doing. Okay. These are the rules. And they're strategizing, utilizing the rules, the gifts that our business partner, the IRS, gives us. Now, maintain your formalities. What's this mean? So important. So, if you've ever seen any of my other episodes, you may have heard me talk about the IRS as a business partner. You've heard me say it some on this episode, but also understanding that the IRS has a love language. You've heard that book, Love Languages. The IRS has a love language, and the love language happens to be accounting, has to be documentation. So making sure that your documentation, your books are structured correctly. They're up to date. Stay ready, don't get ready, right? And so, does that mean that takes a lot of work? Yeah, it does, especially if you have a lot of businesses or a lot of entities. But at the end of the day, you need to have these separate structures, okay? Because why? Because it's our way of communicating to our business partner, here's what we're doing. And you need to have documentation explaining what you're doing. So if it's not an accounting thing, but you need to give approvals and authorizations and documentation, meeting notes, corporate minutes, that those types of documentations indicating what your motivation, what you're trying to accomplish in this overall plan. Okay. Because quite honestly, your financial statements can only go so far. They're only talking about where the money and how the money's flowing. They don't talk about the rest of the backstory, so to speak. Okay. And so that's really important to understand that as well. So let's summarize really quickly. Um, Always be prepared. Don't be in a situation where you have to react and get things ready when there's an issue. Always be prepared, which means that that's number four as well, is that you really should have your books, your documentation, all in preparation. And then the other two things was really utilizing structures and entities in this right liability of what the structure is supposed to be insulating that asset, but allowing you to use these to where you have control, but not necessarily ownership of that particular asset. So hopefully this was helpful. If you like this content or more of this content, let me know in the comment section. Give me a thumbs up. If you're not a subscriber, please feel free to subscribe. And we drop episodes every Thursday. And if you're a practicing medical professional, if you're a chiropractor, a dentist, veterinarian, traditional medical physician, and any specialty around those, feel free to go to our other YouTube channel called Wealth Mavericks. And that's specifically designed for our medical professionals and talking about certain aspects that affect you as a medical professional. This channel is great because we give you some content of what and how we do certain things behind the scenes, if you will. But that's really specific to you. So again, thanks so much. Appreciate you being here. Go make it a great day.